Hey yo, peace and blessings, family. It's your brother Atum back in the place to be with the Don in the crypto Don's trading corner. Man, where we are here, we are excited. And you know what I'm saying, we here to give you the real. The Don, how you feeling, my brother?
What's going on, peeps? I am good. How about yourself, man? It
Hey
is good
man.
to be here.
Yeah, man.
Yeah.
Yeah, man. You know what I'm saying? We here, man. And man, I'm excited from the last show, man. I'm excited to keep this going, man. We want to let people know we got the trading group going down on Facebook. You know what I'm saying? Search the crypto dons. You know what I'm saying? If you
Sorry, it's
can,
private.
yeah, well,
Gotta ask for permission.
that's what it's like. Yeah, that's what it's like. If you pass the test, you know what I'm saying. We can definitely get you on. But like we are honestly here to share and trade this information. You know what I'm saying, to those that are willing to accept it, and also those that share our philosophy of trying to build this community of traders on the net, man. So without further ado, the Don
I'm gonna
had
take you through the program today. I got you.
yeah,
So,
man.
welcome, people. Welcome. So, I know it is called the crypto trading corner, but we have yet to actually show you guys any type of crypto anything at the time. But first of all, what I really want to do for you guys is to just get you to that bare necessities of actually understanding your price chart. So hopefully I don't lose you guys in any of this. I've been doing this for about 6 years, 7 years now, so I've kind of gotten myself accustomed to the lingo. But please assume if I'm saying something where
Yeah.
you
Oh
don't really
yeah.
understand what
Oh
I'm talking
yeah,
about.
yeah. You know I'm gonna tell you. You know I'm gonna tell you. You know what I'm saying, with the double down. And man, just to for anybody that this is their first time watching it, could you just give them a brief history of your experience with trading?
So let's see. I am I'm in school for economics. Okay, I haven't gotten my degree or anything, but I'm definitely working on it. And trading is actually one of those things that is actually paying my way through school at the moment. 2 years of economics, is that really enough to actually understand how the market flows and whatnot? No, it's not. There's a lot more intricacies that I actually need to learn, but the thing is, I'm pretty much head first into this economic history, monetary policy, physical policy. I love what I'm studying, and I pretty much think that is the best thing in the world that you can actually ask for is to, number one, go to school for what you love, and number two, use it to actually pay your way through school. So definitely ups
Peace to
on that.
that. Peace to that.
Um,
Peace to that.
what we're going to do right now is we're going to take you through pretty much how you should start every day, especially if you're on the U.S. side of things. We're probably going to, or we are going to start with supporting resistance on the dollar, and then I'm going to show you guys how that also the dollar hitting its support and resistance areas affect things such as gold, stock markets, cryptocurrencies, et cetera, et cetera. So let's go ahead and get it started. Where's my screen at? All right, so what I have pulled up for you guys right here is going to be a chart of the United States dollar. Again, since we are US traders here, our majority of us are US traders here, we need to understand what's happening in the dollar. When we look at anything in terms of the markets, they're all going to be priced in dollars. So if you don't understand where the dollar is and where the dollar is going, then you're fundamentally going to be on the wrong side of the trade every time. So to actually start
That's
this.
powerful, man. That's powerful. And you know what, man? It's interesting because, I've watched a lot of different traders and people talk about, saying, different things, price points, indicators, everything else like that. You're one of the first people of our generation that has kind of broken that down to me to say that when you wake up, before you make any trades, you need to know where the dollar's at. Like, not necessarily about all these other things that are going on. I mean, you start with the dollar.
Yes, yes, definitely. You do have policy that impacts the dollar, yes, but that's a topic for another discussion. But all of it leads to the same end. You have to know what's happening in those two fundamental areas to actually understand what's going on in terms of everything in the stock market when it comes to what's going on in the grocery store, anything else.
Okay, for
So
sure.
I am going to actually preface that again with saying over the past year or so, everybody believes that they are a stock market genius or a stock market whiz. That cannot be, or that is the farthest from the truth that there can possibly be. So let's actually give you guys a heads up of what's happened over the last year and why some people actually believe that they are stock market geniuses.
Mm.
Now, I've already said that this is going to be the chart of the United States dollar. Let's see what's happened to the dollar over the last year. That's what's happened to the dollar over the last year. The dollar has sold off from at the top, which was March 19th of 2020 being $102 to at the bottom December 2020 at being $89. So you lost $20 on the DXY. And what did that get you? It got you Tesla. It got you Bitcoin. It got you lumber. It got you all of these all of these excesses that you see in the market, overvaluated prices, things seem to jump 2,000% or whatnot. That's been because the dollar has gone straight down. When the
Mm.
dollar starts to get choppy is when we start to figure out who's real in the market or not, because it then becomes a stock pickers market. And that's the market that, as you can see, we've been transitioning into since about September here. Now, let's go ahead and start talking about our support and resistance. So, um, we have different options in order to draw support and resistance. I choose to go off of what's the psychological price points. Psychological price points are things that end in even numbers, such as your fives, 25s, 50s, and 75s. All of those are even. We're going to extrapolate that out, right? So we're going to say we're going to start here at $90 and we're going to go to 100. As you can see, I already have an indicator on my screen. For you guys that don't know, the chart that we are using is going to be TradingView. It's a free chart, so all you have to do is just go in there and open up a chart. The only thing with it is, since it's a free chart, it limits the number of indicators you can have. You can have only 3 indicators. I'm going to try to make it where you use as least amount of indicators as possible for you to trade here. So we
So
do have,
so do in your opinion do indicators sometimes hinder people?
yes,
Mm,
yes.
why is that?
Uh, Actually, I'm going to show you.
And I'm asking as you called me a simpleton. You know what I'm saying? I gotta make sure that we are properly breaking down. You know what I'm saying? What's going on? Because then also kind of like you've mentioned to me on on occasions on how sometimes people can have these indicators that they don't even know how to properly use. Kind of the same way like you get you a Ferrari or a Lamborghini, what I'm saying, just to drive in Houston traffic. You don't know really about the
You don't know how
engine.
to drive a stick shift and you get stuck on a bridge. That's
Right.
what.
So yeah, break down like how indicators can sometimes hinder you as a trader.
Yeah. So as you can see, I've brought up a whole bunch of indicators on my screen. Now, the number one thing about indicators is the more indicators you have on your screen, the more cluttered your screen is, and it's a lot better to trade with a clean as possible screen. So um, indicators, they're okay to use once you actually figure out, okay, is price doing scenario A, B, or C? And once you figure out, okay, it's doing A, B, or C, then that's when you bring out your indicators and you say, okay, I'm going to do more of a deeper analysis into scenario A, B, or C. So indicators should not direct your trading bias, but assist it. And pretty much what happens is traders, they get all these indicators on their screen and then they use it to direct their trades instead of actually assist their trades.
Gotcha. Gotcha.
So I am going to get rid of all of these indicators again.
Mm.
All right, so support and
So
resistance.
you want to assist your trade. You don't want them to direct your trade. Mm.
Yeah. So bringing it back to support and resistance, um, introducing you guys into the drawing panel here. Once you click on that drawing panel, then you're going to go over to this third area here. You're going to go to fib retracement, or you can always press Alt F. And what we're going to do with the fib retracements is we are going to go to 90 and 100. I'm going to show you guys how you do that. So you click on it, or you click Alt F, and you bring up the indicator. You go into the indicator, you hit coordinates, and then you put 90 and 100. So that's already done.
All right. And so why did you choose 90 and 100?
Again, those are going to be your psychological numbers. 90, 95, 9250. You have 9075. 9075. All of those are going to be easily counted numbers. So what you're actually looking at is you're changing everything into quarters, right? So you're trying to break up your trade into certain specific quarters. And these certain specific quarters are going to be the ones in which you're wanting to see what price action does around them. Because let's say 95 250 is going to be much different than saying 94.75, right? That's because when we think about 90, I said 94 250. 94 250 is going to be above that $95 area. So it's going to be above that 50% mark between 90 and 100. But when you talk about prices at 97 or 94.75, which is going to be right here, you could say that is just under that 50% mark. So there's a categorical difference between both of those two price points. Now, support and resistance here. Our bottom support area. Let me show you guys how I get to the statistics first, or the lines. So these are going to be the settings in which I'm using to get what you guys see here on the screen. So 0, 100, and 50. Let's go ahead and delete that. And this is what those three lines are going to look like over the span of time of about 6 years. We can see how price interacts with these two areas. When we look here at 90, we can see that that is a long-term support area. Back here in 2018, that's just where we crashed at and we rebounded. And we can see a very similar thing here happen in 2021. Now, for our 50% area, if we look at our 50% area, that's going to be the area in which we can say that price went from being bearish to bullish. This is like a confirmation, I guess you can actually call it, because it is so far away from this lower area here. So when we see that price is able to either stay above or below that 50% mark, we're calling that bearish or bullish. Here, price was able to stay above that 50% mark. Now, did it spike below it? Yes. But you can see throughout that whole entire time, it spent less time below 50 than it did above 50. and we have 100. So over the last 6 years, what we can see is that once price has hit $100, it hasn't been able to stay above that area, and it has either come down to the 50 or come down to the zero. That is going to be how I like to look at support and resistance, rather than just arbitrarily by eye trying to figure out, okay, is resistance here or is it here? Is it based upon how many touches happen at the level? How is it done? No, I'm looking directly at price point. I know all three price points I'm looking at: $90, $95, $100. I can wake up tomorrow and say, what price points am I looking at? $95, $90, $100. It doesn't change. Doesn't change.
Gotcha. Gotcha.
So at this point in time, trading between $90 and $95, we can see that there's a big space here. We need to fill that space with more information. We're going to actually fill that space with more support and resistance areas based upon price. So what we're going to do is we're going to start here at 90 and we're going to go up to 95. These are going to be the settings I use to get these very specific numbers. Feel free to copy them down. I'm going to tidy up my chart by making sure I'm at 90 and 95. And then we're going to do some analysis on support and resistance again. So this gives us a better look into what price has the possibility of actually doing here. Again, we can continue to see that this is going to still be our base of support. Why is it a base of support? Because the amount of time that it spent confirming that $90 was a support area. Back here in early 2021, we decided to stay around this area a little bit longer than we did now. So what that tells us is that there were willing buyers that were at the ready once price hit $90, and that's because of what we saw back here. Well, the actions that we saw over the past month or so, price stayed here between May 18th and June 10th. We saw that confirming that this is a place that the masses are buying at. Now, we also have another couple of areas here between $91 and $90.89 right here. This was that next area that we were actually looking to see what would happen. We were trying to figure out, okay, we're going to see price reject this area, or we're going to see price move through this area. Just so happens today was FMOC day, Fed Market Open Committee. They let us know their future projections for where the dollar is going to go. And as you can see, investors like the sentiment that the Fed was actually putting out. This allowed the dollar to go above that first resistance area. And now we're here at the second resistance area. Okay. So looking at the second resistance area, it's the end of the day. We won't see anything until markets open tomorrow, whether or not the dollar will have a continued rally behind it, or will it decide to kind of peter out right here just for a little while until traders, until the market pretty much figures out the next step. Now, normally what we see with these FMOC days is that once we do have these big price moves, it's rejected the very next day. So we do get some type of pullback. The market tries to gain its feet a little bit more. And from that pullback, it decides where it wants to go. If we're going to look out to what's happened between these two lines in the past, we can see that once price actually got above this 3250 area here, 3250, which is going to be these lilac lines, that it was majority support since then. So it's going to be very consequential to understand, okay, are we going to see a point in the market in which, again, we try to confirm price moving above this area? That's, if we do see price confirm that area, then we have another opportunity at another resistance area here. So that's pretty much going to be that first chart that we're going to look at to actually understand where the dollar is actually going to go from here. I want you guys to actually keep in mind that for the purposes that I'm going to show in the future when it comes to the other charts that we're going to see, we're going to expect the dollar to continue to move higher. So I'm going to leave it right there. Atum, anything? What's going on, man?
Hey man, you hit it, man. Yeah, I appreciate the lesson because I'm sitting over here taking notes myself, getting it in. Um,
Okay.
but yeah, man, I think that this is a great place to start for a lot of people because, like you said, the things that you're talking about can go across the board. As far as whether you're talking about, stocks or cryptocurrencies or anything else like that. But, the main lesson that I'm taking away from today is knowing where the dollar's at while I'm making these trades. And so, one question I do want to have before we get out of here. So, in your opinion, when the dollar, should you be making more trades when the dollar is stronger or weaker?
That's not the issue. More or less, trading is not the issue. You trade when the opportunity presents itself. Just so happened today was a very volatile day. So today was one of those days in which opportunity did present itself to gain a massive move. Uh, I haven't checked to see what's happened in the Dow or the S&P, but I can almost assure you with a dollar move like this, we did see some red on Wall Street today. So we're going to go ahead and analyze how that's gone. We're probably going to go over um, probably the S&P 500 or Dow, and then we're going to go over to Bitcoin.
Okay. Okay, man. For sure, man. Well, man, bro. Great times, man. Another great lesson, man. How can people find you, follow you, support you, bro?
You can hit me up on Robinhood FX. That's going to be my YouTube. I believe that is my Odyssey down there also. You can also hit me up on Twitter. Instead of hitting up Robinhood FX, it's going to be Robinhood 2FX. But we'll definitely leave some links down in the description for you.
Yeah, man. Well, hey, man. Another time, man. Another day up, another day down, man. It's your brother Atum Ra. Check us out on melanated.illuminated.com. Man, we out here, we building, and
I'm
man,
getting bit by
salute to you, man.
mosquitoes. Peace out.
Peace.